Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a trade idea that I'm monitoring at the moment. And the instrument that I'm watching, I've been talking about it a lot if you've been watching my videos in the last couple of weeks. It's euro dollar, okay? So before I tell you my trade idea, let me just sort of outline what has been happening recently. You can see that euro dollar just pushed to the upside of a sort of 101 to 103 range that it had been trading within in the last couple of weeks. Now trading in the 10300s, sort of peaked out at around 103.50 or just above. And this latest rally in euro dollar is as a result of dollar weakness after Wednesday's softer than expected US CPI data, which I went through in more detail in yesterday's video if you want to go back and watch that. We're now testing some key areas of resistance. So let me just show you. We've got around 103.50. That was an area of support on multiple occasions in May into June before we broke below it in July. And there's also a long-term downtrend that euro dollar has been pretty much capped by all the way going back to February. And it looks as though we're probing that as well in this area in the mid 10300s. Also probing the 50-day moving average, which, as you can see here, around here and here, on 3 occasions in the last sort of 4 or 5 months, has been a really solid area of resistance. So a lot of people might be thinking, is this a time to add to shorts? Because, all these technical trends suggest that we could be headed lower. We've got massive resistance here. The one thing I would say is since Wednesday's softer than expected US inflation figures, we have seen risk appetite really pick up. Now, euro dollar does have a positive correlation to, say, US equities. And if that rally in risk appetite continues, then dollar weakness, because it's seen as a safe haven asset, could send us higher. So this is something I'm watching out for. The next levels you'd want to be looking at are around 106. Now, I don't think the fundamentals justify a move beyond 106, even if risk appetite is super strong. The fundamentals as they are now, I don't think justifies a move beyond this sort of area. Okay, why is that? Well, okay, headline inflation is starting to ease in the US, but core inflation remains very high, which means that the Fed is still going to have to be hawkish. I mean, we've had, since yesterday's CPI data, which was softer than expected, we've had a bunch of Fed members coming out and sort of doubling down on the fact that the inflation fight is not yet won. They still got a lot more work to do regarding, raising interest rates and all that kind of stuff. Hand in hand with that is the fact that recent data has shown us that in July, the start of Q3, the US economy has actually been pretty strong. The jobs data, the ISM data. So things are looking still quite hawkish in the US from a central bank perspective, and the data shows that we're still growing, we're still doing okay growth-wise. Now contrast that with the Eurozone, and you've got a worsening energy crisis still, which is, recent data has shown us, is having an increasingly worse effect on the economy, and that's expected to continue. So, and that's all dampening the outlook for ECB tightening, even though markets, they do expect some further near-term tightening, another 50 basis point rate hike from the ECB at their next meeting. But beyond that, markets aren't expecting anywhere near as much tightening from the ECB, given the much weaker outlook. So, all that being said, I think if we were to break above here on risk appetite and in the next couple of weeks push higher towards 106, this would be your area. Obviously, the story would still have to be a story of US economic outperformance and a more hawkish Fed compared to the Eurozone economy and the ECB for this trade to sort of work out as expected. And like I was saying just now, you might not get the opportunity, because if the dollar starts rallying again now, because this is an attractive area, then we might we might not get back to 106 in the near term. But anyway, guys, hope you enjoyed the video, and I'll see you all in the next one.